Hey everyone, welcome back to the Web3 Daily. Today, man, it feels like the whole market is just holding its breath. It's a sea of red out there. So what's the deal? Alright, let's do a quick market scan. Over the last 24 hours, we've definitely seen a pullback across the board. Bitcoin is just kind of chopping sideways around that 115k mark. Pretty boring stuff, honestly. But it's a different story for Ethereum, and the major alts, they're not taking it so well. Most are down anywhere from 3 to 5%. And I'm getting the sense that the vibe has just cooled off. That crazy FOMO energy we had recently is gone for now. Feels like everyone's on the sidelines, just waiting for some kind of clear signal. And what is that signal? Well, it might have everything to do with the massive topic we're about to break down. And that topic is the SEC. Yeah, the SEC suddenly giving a massive green light to the entire crypto ETF market. Honestly, when I saw this headline, my first thought was, wow, the day Grayscale and BlackRock have been waiting years for is finally here. So here's the breakdown. The SEC has rolled out a new generic listing standard. What does that mean? It means that for new crypto ETFs, as long as the underlying asset has a regulated futures market like Bitcoin and Ethereum, they no longer have to get in line one by one and beg the SEC for permission. They can just use an express lane. This basically removes a giant roadblock that's been clogging up the pipes for years. Some analysts are literally calling this a Cambrian explosion for crypto products. Get this, Bloomberg analysts are predicting we could see over 100 new crypto ETFs launch in the next year. 100? What does that even mean? It means all that Wall Street money that had to jump through hoops to get in before? Now, they've got a superhighway built right to their front door. And right on cue, Grayscale immediately launched the very first index-based spot crypto ETF, ticker GDLC. I checked out its holdings. It's about 70% Bitcoin, a little under 20% Ethereum, and the rest is sprinkled across stuff like SOL and XRP. See? This is a blueprint for how institutional money is going to allocate capital in crypto. So, with all these traditional finance whales getting ready to jump in the pool, what else is happening in other corners of the ecosystem? Let's kick it off with our first piece of news. And speaking of big money coming in, you can't ignore the absolute bedrock of it all, security. Recently, some rumors started bubbling up again in the community about an alleged data leak at crypto.com back in 2023. When I saw that, I thought, uh-oh, this could be a big deal or nothing at all. But then, their CEO, Chris Marsalek, went straight to X and confronted it head-on. His language was pretty strong, too, basically calling the rumors misinformation. In other words, just plain FUD. What I find interesting here is the way they handled it. In our space, the worst thing a project can do when faced with negative news is just go silent and let the FUD spread like wildfire. But look at Crypto.com this time, the big boss himself stepped into the ring. No beating around the bush, and just squashed the rumor before it could grow. It's really a statement to the market, saying, we're watching, and you are not going to manipulate the narrative that easily. Of course, this isn't their first time in the hot seat. Everyone remembers the incident back in 2022. Maybe it's because of that lesson that they're now extremely protective of their reputation and the security narrative. So, you see, a platform's strength isn't just about how high it can fly during a bull market. It's also about its reaction time and its strategy when faced with a crisis or a rumor. And for us as users, that's actually a really important window into how they operate. Alright, so we've seen the PR battle from the exchanges. Now let's take a look at what happens when a publicly traded company treats Bitcoin as its core asset and what new plays they're running. So, you all probably know Metaplanet, the Japanese company they call Asia's MicroStrategy, right? They've been aggressively stacking sats, but I just saw their latest move. And this is where it gets really interesting. They're not just buying anymore. They've gone to the US crypto hub of Miami and set up a brand new subsidiary called Metaplanet Income. The name says it all, income. This new company's whole mission is to take the Bitcoin the parent company holds and use it for things like derivatives trading and other yield strategies. In plain English, they're putting their Bitcoin to work. At first, I thought this was just a copy-paste of the MicroStrategy playbook, just buy and hold. But when you look closer, this move is way more ambitious. They're no longer content to just be hodlers. They're turning their Bitcoin stack into a productive asset that generates continuous cash flow. Have you thought about the signal this sends to every corporate treasury department in the world? It's telling them that holding Bitcoin isn't just a hedge against inflation. It can be an entire business unit, a profit center. This marks an evolution in institutional Bitcoin strategy, moving from a simple store of value to a much more sophisticated financial operation. The game is getting a lot bigger. If we're calling company-level moves tactics, then what we're about to talk about is a major strategic play. And it's coming from the East, Hong Kong. Earlier this year, back in May of 2025, quietly did something huge. They passed a landmark stablecoin bill. When I saw that news, I knew this was not a small development. The core of this bill is that it opens the door for licensed institutions to legally issue fiat-backed stablecoins. But the signal this sends is, in my opinion, way more interesting than the bill itself. First, it directly paves the way for the creation of an offshore Yuan, or CNH, stablecoin. Think about it in a world dominated by dollar-backed stablecoins like USDT and USDC. What does it mean when a compliant, Yuan-backed stablecoin endorsed by a major Eastern financial hub suddenly enters the scene? This is a subtle but clear challenge to dollar hegemony in the stablecoin arena. Furthermore, Hong Kong has always been seen as a testing ground for mainland China. Against the backdrop of the mainland's strict crypto ban, it's hard not to see this move as Beijing looking for a new breakthrough, either for a potential future policy shift or for the internationalization of the yuan. I'm hearing that even giants the size of JD.com and Alibaba have started exploring their entry. And when players like that start paying attention to stablecoins, the entire scope of the story changes. Alright, we've talked macro and we've talked money. Now let's shift our focus back to the cutting edge of tech. The AI space is something everyone is talking about, but what happens when AI collides with the blockchain? A project called Zero Gravity Labs, or Zero G Labs, just launched its Aristotle mainnet with a lot of fanfare. This is a layer 1 network built specifically for on-chain AI. Honestly, when I first saw another L1 mainnet was launching, I wasn't paying close attention, but then I saw their partner list, and I immediately sat up straight. Google Cloud, Alibaba Cloud, Chainlink. Over 100 projects and companies announced partnerships on day one. Plus, they've already raised $35 million. What does this tell you? This is no small operation. Their vision is pretty grand too. They want to solve the problem of AI being monopolized by a few tech giants and turn AI into a public good that anyone can access and use. When I saw this news, my first thought wasn't, oh great, another public chain. It was, the rules of the AI game might actually be about to change. The AI plus crypto narrative has been hyped for a long time, and now we finally have a heavyweight contender entering the ring with serious resources and top-tier partners. This is like paving the superhighway for future decentralized AI applications. We don't know what killer apps will eventually run on this highway, but at the very least, the road is now officially open for business. Alright, enough with the high-level AI infrastructure. Let's get down to a story that's incredibly boots on the ground. Even a little bit raw. Sometimes crypto adoption doesn't happen because the tech is so cool, but because the real world simply runs out of other options. This story comes from Bolivia in South America. Right now, if you want to buy a car there, we're talking major brands like Toyota, Yamaha, even BYD, you can pay for it directly with USDT. You heard that right, buying a car with stablecoins. When I saw this news, my first reaction wasn't, wow, crypto conquered another country. It was feeling the deep sense of desperation and real-world pressure behind it. Why is this happening? Because Bolivia's central bank is running out of physical US dollars, plunging the country into a severe dollar shortage. For businesses that rely on international trade, like car dealerships, getting paid in the local currency is useless. They need dollars to import new inventory. In that environment, USDT becomes hard currency. It's a digital liquid dollar.
And what's even more interesting is that the Bolivian government had previously banned crypto. Now, faced with reality, they've been forced to open the doors.
This is adoption in its purest form, driven not by hype but by sheer necessity. This kind of news, honestly, makes me feel the true power of this industry, more than seeing some coin pump 1,000%. It shows us that, in many countries, stablecoins aren't speculative instruments at all. They're an economic lifeline, a lifeboat for ordinary people and businesses to protect their assets. This is where the rubber meets the road for that whole banking the unbanked promise of crypto. After seeing that Wild West growth in emerging markets, we have to bring our focus back to the epicenter of the global crypto world, the United States. A huge debate about the future of regulation is unfolding there right now. The chairman of the US House Financial Services Committee, a guy named French Hill, just published a new op-ed. And after reading it, my biggest takeaway can be summed up in one word: urgency. In the article, he's basically sounding the alarm, saying that the US has fallen behind on crypto regulation. He compares the situation to Europe, pointing out that they already have the clear MiCA framework, a complete rulebook. Then he points to Latin America, saying they're already using crypto to solve real-world problems, and the US is still stuck with regulation by enforcement, with the SEC suing everyone. A chaotic approach that's scaring away innovation is being pretty blunt, basically saying we are handing the future over to our competitors. So he's making a call to action. Congress must pass a comprehensive market structure bill before the end of the year to give the industry clarity. You'll see how this connects back to our main topic about ETFs today. The ETF approvals show a regulator adapting within the existing framework, which is progress. But what Hill is demanding is a foundational solution, passing laws from the ground up to create clear, long-lasting rules. The next few months are going to be critical, not just for the US, but for the entire global crypto market. The outcome of this race to regulate will directly shape the industry's landscape for years to come. Alright, that's all for today's Web3 Daily. If you found this helpful, be sure to hit that like button to show your support. Every day, we sift through the noise to bring you the most important news in the Web3 world, the core information that's closest to the money. We hope that by breaking down these curated insights, we can help you make more rational and informed decisions on your Web3 investment journey. Also, I've dropped exclusive sign-up links for all the major exchanges down in the comments section. These are special high commission rebate deals we've secured for our fans, and we hope they can help you save on some costs as you invest. Let's all stay rational, move steadily, and get rich slowly here in the world of Web3. May all of your crypto portfolios see steady growth. We'll see you tomorrow.